$150 silver, $50 silver. I want you to remember something. We've been there twice, 1980, 2011, two instances where we hit $50 silver. But I want you to think about something. 1980, $50 silver, when you adjust that for inflation, that's equal to at least $150 silver today. In this video, we're going to examine what is similar now to 1980, but also what is different and what could potentially lead to silver prices going even higher, even in inflation-adjusted terms, than what we saw in 1980. 9 critical points that'll have you looking at the silver price in a different light. But before we get to that, the most important thing is you. I want to say thank you for joining me here in the basement. This is not possible without you. You're smart. Your thoughts matter. Please leave a comment in the comment section below in this video. We read each and every one, and it gives us all an opportunity to learn from each other. And if you could please subscribe to the channel, I'll put out a new piece of content every single day. And make sure you press the little bell so you get notified. And thumbs up are certainly appreciated. Let's start with talking about silver supply. What is different now as opposed to 1980? In 1980, there was still a lot of low-hanging fruit in the world of silver. There was still a lot of easily accessible high-grade silver. Most all of that low-hanging fruit silver now is gone. We know that when the silver price skyrockets, the mining industry, due to lack of investment, won't be able to just turn on a switch and start producing 2 or 3 times as much silver, which is likely what we could see from a demand perspective in the coming decades. The other thing to consider is that back in 1980, there was still a lot of pre-1964 silver coinage on the market. That provided a lot of supply into the world of silver. A lot of the pre-1964 coinage, you can't find it at the banks anymore. It's held by collectors. It's held tightly by people like you and me, silver investors who aren't going to part with it at any price. The next thing to consider is demand. What's different now as opposed to back then? And we're going to talk about that in 1 second after I mention to you channel sponsor Pimbex, P-I-M-B-E-X. That's where you can go to get your hands on some silver, gold, or platinum group metals. Hey, it's where I buy my silver, and I did that long before they sponsored Ron's Basement. What I like about Pimbex is they always have a great selection. It's a company I know I can trust, along with hundreds of our fellow basement dwellers who have emailed me and said they're so happy with the quality, service, and price that they get at Pimbex. Because at Pimbex, you'll always find ultra competitive prices. You'll get more metal for your money. So on a demand perspective, what's different in the silver market now than what we had back in 1980? One big thing that happened back then were lines out the doors. If you listen to the old timers, there were lines out the doors at the local coin shops. People would get there at 6 in the morning and wait in line just to get their hands on some silver. That's different now. In a matter of hours, the entire retail silver inventory can potentially be wiped out. We saw this during the C-19 crisis. We saw this during the little banking crisis about 1.5 years ago, where there was no silver to be had anywhere because with online sales, you don't have to wait in line at the local coin shop. You can buy pretty much as much silver as you want, as long as it's available, within just a few minutes with a few clicks on your smartphone. The next thing to consider from a demand perspective is that in 1980, China and India were very small, very minimal players in the silver market and the gold market. At minimum, they were nothing like they are today. Today, China and India and the BRICS nations in general are devouring the world's precious metals. We know what's going on with gold. But with silver, we also know from data that we get from the Shanghai Gold Exchange, we know that from the data we get regarding India purchases and imports of silver, that they are massive, massive players. So from a demand perspective, that adds a whole new angle on what's going on in the silver market. The other thing to consider from a demand perspective is these new areas of growth: solar, electronics, semiconductors, waste sanitation, electric vehicles. We have new growth areas that are demanding more silver that really were very minimal or almost non-existent back in 1980. And remember, in 1980, the silver price in today's dollars got well north of $150 per ounce on a macro level. Okay, we didn't have the crazy national debt that we have today in this country. Right? We know that the paper to silver ratio right now that measures how many dollars are printed every year for each 1 ounce of silver that's produced by the mining sector is over $400. There's over $400 being printed for each 1 ounce of gold that's being produced. We know the national debt, $35 trillion and growing by the day. That was not the case back in 1980. So that sets a whole macro support level where we know that more money printing is happening right now and will likely increase in the future, which will only dilute the value of the dollar and only increase the value of precious metals like silver. We also know that back then in 1980, there was a much higher percentage of the world's financial assets invested into precious metals. You hear numbers like 2%, 3%. I think maybe it got as high as 4 or 5% at one point. Currently, we are at 0.5%. We are benefiting right now, even though it may not feel like it. We are benefiting from what I like to call the rule of small numbers. We've been beaten down so low, only 0.5% of the world's the Western financial assets invested in precious metals. It's a lot easier to go from 0.5% to, let's say, 2%, which is around the long-term average, but that represents a 4x, 4 times as much money going into precious metals. A few other important things to consider that really are different now as opposed to 1980. We also have this long-term coiling of the silver price as a result of long-term downward price manipulation in the paper unicorn fart dust silver markets by the electronic exchanges, the COMEX in the United States and the LBMA, the London Bullion Market Association in London, England. It's like a beach ball that's been held under water. And when it goes, it's really going to go. We know the first stage of this will be silver breaking through $34 per ounce. And from 34 to 50, there's very minimal resistance. One other quick point that I want to end with you is the fact that from 2001 to 2012, we had a bear market in the US dollar. The US dollar index is near historic high levels, not record highs, but historically speaking, very high. If we do indeed go into a bear market, it's going to be a lot easier for the dollar to go into a downward trend as opposed to an upward trend because it's already very high. If we do indeed get another 10-year bear market in the dollar, I invite you to go look at a silver chart from 2001 through 2011, the last time we had one of these bear markets. The silver price during that period went from about $5 per ounce all the way to $50 per ounce. So in my opinion, as we sit here right now with record all-time highs, $2,500 gold in the spot market as I record this video, silver has a lot of catching up to do. Oh, we forgot to mention a very important point, right? The gold to silver ratio. With $2,500 gold and the gold to silver ratio at historic highs, 90 ounces of silver to get 1 ounce of gold. Long term, even in recent history, that should be around 50 to 1, 50 ounces of silver to get 1 ounce of gold. If that were the case right now, a 50 to 1 gold to silver ratio, we would have $50 silver right now. I believe that it's coming. Don't make any financial decisions based on anything I'm telling you. I'm giving you my truth, what I see. Your job, listen to me, listen to other people, make up your own mind, always stack silver responsibly. It's a big deal when you join me here in the basement. Please help support our sponsors, Pimbex, First Mining Gold, and Fortuna Mining. You can learn more about all of those companies at their respective websites, to which there's a link in the description of this video. Most important, thank you for being here. Don't forget to subscribe. I want you to come back to the basement, and I'll see you soon.